just fine. I always like to verify that, so if somebody could give me a shout out, let me know that you can hear me. Awesome. Thank you, Deborah. Good, good. Hope you've all had a good week. Make sure we're updated there. Welcome out to the market mashup yet again. And good. Thank you, Gilly. Appreciate that. You mean the sound is good or I sound good? I'm just kidding. Just try to have a little fun, right? Because I always sound good, right? No, I'm just playing. Um, well, welcome out. I think I said that already. Welcome to the Market Mashup. If you haven't been here, if it's your first time, appreciate you stopping by to check us out. And let's get all the legal junk out of the way. Always the fun stuff, right? Basically, this says we're not registered broker-dealers, investment advisors. I'm not going to give you any recommendations or advice. Everything that we do here is purely educational. In fact, if I'm speaking about a trade and I forget to say paper trade or practice trade or unfunded trade, then assume that it is. For regulatory reasons, we do not discuss funded trading here, like in the old days, but that's a different story. You see also the last paragraph there, we're not subject to trading restrictions, could be in a trade, out of a trade, thinking about a trade, dreaming about a trade at any time. So if you are new to the mashup, I'll show you the agenda, and there you have it on your screen. A nice little viewer over here shows me what you can see. So if you're looking at the screen and wondering why it's blank, that's because that is the agenda. We don't have an agenda here, so we talk about whatever we want to. Anything that we want to cover, anything that we want to talk about. Most of the time we end up talking about tactical analysis or mindset, which realistically are both pretty much one and the same. They're not really any different from each other. So it's just one of them is a visual representation of what the traders are feeling and thinking with regard to either the overall market or a specific stock. So, and that's really kind of where the mindset side I absolutely love. It's intriguing to me. The human mind is fascinating, to say the least. You know, you can watch TV for about 2 minutes and see that. You know, you watch any news program and you see people being crazy and doing stuff, and you just shake your head and say, "Well, why would somebody do something like that?" It's just, it makes no. But then when you really dig kind of deep, it does. So it's not something you like kind of deep when it trading we like thinking and important. Everything's coming. Uh, no. Connect hardware. Maybe this will do it. Heard me typing. Okay, I am heard. And off, then coming back. Now, okay, how about now? Slow motion? Maybe I'm just talking slow. Better? Good, better, okay. Okay, good. Getting several people saying better, better, better. Good, good, good. Amen to that, Corey. I don't know what that was. You know what? Maybe it's just I've always had a hardwired connection, so maybe my machine's gotten used to it. Um, Even though it's weird because I've got a new desktop, and so I hardwired that. I just set it up the other day, a couple days ago, and so I've been moving the laptop around and didn't think I needed a hardwired connection. Considering I get 175 megs down, I just tested it to see if my speed was good, if it was the internet connection that was a problem. But you get 150, 200 megs download, and there's usually 10 to 15 upload. Shouldn't be an issue really, speed wise. And I don't know why the wireless versus hardwired is. I know hardwired's better, but I've done it on wireless many a time. So kind of weird. Not sure what that was all about, but I guess I'll just make sure we're hardwired every time from now on. So, oh, you know what, Brenda? I'm so old now that my mom just doesn't care, and she kind of knows that I do my own thing anyway. So I don't really listen to her. I didn't listen to her when I was a kid. Why would I listen to her now? That's a funny thing. I know testing it. We should have. I mean, don't think you should have to test it. You do this a couple hundred times and think that testing should be done, but she will get me. So anyway, getting back to the mashup, I don't remember what we were talking about. Something to do with mindset. Well, that's no surprise. That's usually where we go to anyway, right? So, um, but if you do have any, if anybody has any stocks you want to look at charts, analyze charts. Any questions you have, get them off to me ASAP, because those of you that are here regularly know that uh, I find squirrels easily. I'm a little ADD-ish, even though I've never been technically diagnosed, but my son has been, so it's pretty obvious, especially when you see him and you see me and how he acts and how I have to work hard to stay focused. I have to work hard to keep him focused too. But and speaking of my son, I do have to cut out about 10 or 15 minutes early. I got to get him to camp. He's summer break and he goes to a camp that he absolutely loves. So um, I'll be a little bit late anyway to get him there, but so I'm going to go as long as I possibly can here. But I will have to quit a little bit early today. So that's why if you want to see something, I want to get to that now and get that stuff knocked out. So. Oh, there's an interesting question, Mark. Um, I keep hearing the world is going to crash, same as the last 10 years. Do you see anything coming our direction? Um, yeah, at some point. That's the tough part, and especially with respect to trading, especially if you're taking a longer term view, um, is the question is when. So, and that's always, regardless of what time frame you're trading on, the tough question is always when. When's the stock going to go up? When's it going to go down? When's it going to change direction? And the best we can do is take the information that we have, look at it as objectively as we can, and come up with an idea of what may happen next, and then go with the odds. And that's really the best we can do. Whether we're talking short-term trading or long-term trading, a big picture view. Um, I mean, my big picture view has been for a while that we're going to have a correction in the market. The question is, number one, when, how far, and how fast will it go? Um, I mean, but then again, I've been wrong before, so I'm wrong all the time, and it's not one of those things that um, I've just learned it is what it is. You're going to be wrong more often than you're right. And the reality is, the best thing that we can do is, I can't remember who said it, who's been quoted with it, but basically, hope for the best and prepare for the worst and hope for the best. And that's basically the mindset I have, is that I expect the market to drop at some point. And part of it is, and we've talked about it here, there's multiple reasons. Number one, you've got baby boomers, which may or may not play into things, but the baby boom generation is starting to retire. And they've got a lot of their wealth tied up in the markets. I think this is one of the big reasons is what happens when they need their money to pay bills. So when they start to retire, the question becomes, will there be enough people, will there be enough money that people bring into the markets to make up for what they're taking out? When they start to withdraw on a regular basis, or imagine what happens, and this is why I wouldn't be surprised to see a big crash, because what happens if the market does start to sell off? And that entire group, that entire generation of people says, whoa, I remember 07, 08, I don't want to go through that again. And the market's starting to drop off, and they panic and start to sell. And they say, I've only got $300,000 to live on for the next, 15, 20, or 30 years, however long I live, because you don't know how long you're going to live, right? And all of a sudden they panic and go, they call their broker and say, just cash out all 300,000. And if you get, it's kind of like the old run on the banks, right? Now, will this happen? I don't know. It's speculation, obviously. It's one of those things that is a possible reality. It could happen. The question becomes, will it? And that's what's so difficult about your question. It's not really difficult. It just is what it is we don't know what's going to happen for certain, but we have to take the factors that come into play, like the baby boom generation. A lot of their wealth is tied up in this. A lot of them went into real estate in 07, 08. A lot of them won't touch real estate now. But the question becomes, because we are becoming a more global society, there's a lot of money from overseas investing in the U.S., a lot of money from overseas putting money into the U.S. markets, because their markets are either not stable or they're just not a good place to invest because their economies aren't robust like ours is, or once was. It might be again. We'll see. But so there's just lots of different dynamics, and then you look at the banking situation, um, and you look at the question. And I've read several articles from different sources, and there's one gentleman I know that he looks at it, and he's pretty doom and gloom, which I understand, because when you step back and look at the banking situation, the Fed, and how leveraged the Fed is, which we really don't fully know because we can't see any of their books or what they're actually doing, because the Fed is appropriately named for the masses, those sheep that think that it's part of the government. And it's not. The Fed is actually a private organization. If you're not familiar with that, then welcome to reality. It's not trying to be, I mean, it just is what it is, right? The Fed is a private organization. That's why you hear politicians say we need to audit the Fed. Well, you can't audit a private organization. The government can't go in and just audit a private organization. I mean, they can, but they at least from what I understand, they have to have some type of cause, some type of reason to go in and audit. But the Fed's a private organization, and even though the head of the Fed is appointed by the president, so it's what I see as a major problem with this entire country. You got this quasi private slash public thingy. So, and it's like that with everything. And now it seems like, seeing some, just being aware of some of the stuff that goes on locally around me. There's cities that seem to run themselves as if they are a business. And it's funny because you got these government bureaucrats that used to be called public servants, but they're not really public servants anymore. They are there to develop and create their cities in a way that brings in the most tax revenue. And I see it in the town I used to live in, is that, I mean, it's blown up and getting huge, and traffic out there has gotten terrible because they didn't plan traffic that well. I've got a friend that deals with some of the real estate, owns some property out there, and there's a company that is a nationwide company that's been trying to get into this town. They've, for nearly 18 months now, they've been trying to get their place of business open, and the city is giving them nothing but hassles because the city did a terrible job of planning the traffic patterns, and now they're making them jump through hoops trying to get it to fit what they messed up, basically. And then down the road a little ways, they're building a bunch of new development stuff. And so it's like the city is doing one thing. They're looking at how can they create more tax revenue? How can they create more residents? And it sounds more like a business than it does a government bureaucracy. So, and it seems like that's where everything is. I mean, you got New York the last several years. I see ads on TV. Come to New York, start your business here. We'll give you tax-free benefits, which actually I think is a good thing. I know it sounds like I'm being negative about it. And on one hand, I don't like it, but on the other hand, it's a good thing because now it's kind of the way the whole country was set up, right? You've got states and cities and different municipalities that are competing with each other to improve things. And that's actually a good thing. It's just like business, right? They're competing. So it is, it can be hugely beneficial. At the same time, you've got the bureaucrats that don't really have an incentive to produce a profit because they're going to sit back and collect their fat paychecks anyway, whether they actually produce anything worthwhile or not. And in a for-profit business, you can't really do that. You can't just sit back and, take weeks or months or years to make things happen. So anyway, I told you I'd find some squirrels, right? Yeah, that's a good one. Class is called Exposing Wall Street Myths. But anyway, Mark asked a very interesting question that has got me going down a rabbit hole. But the question becomes, I was going off on the Fed, and the Fed is extremely leveraged, at least from what we know. And I believe part of what has kept this market propped up is the Fed. I mean, and part of the frustration for me is you go back to 07, 08 when they were bailing everybody out. Everybody's whining and crying about, oh, everybody's getting bailed out in these companies. And, Goldman came out and announced record profits like 1 or 2 or 3 quarters after getting bailed out, right? So the government gives them billions of dollars, bails them out so they don't go under. And then a couple quarters later, they're announcing record profits, and everybody's whining and crying, going, I can't believe it. Dude, we bail them out. We take our tax money to bail them out, and then they make all kinds of money, and it's just not fair. It's not right. But what's funny is that Goldman's profits were like $2 billion or something like that for a quarter. Maybe it was the annual profits. I don't remember, but it was a good-sized number. But nobody talks about the Fed and how much money the Fed made on all those transactions, because the number was something like 10 times or 15 times what Goldman and all these private enterprises made, which the Fed is private, so they made 45 billion or something. It was just some crazy number. Like, they made a huge profit. And the funny thing is, if the Fed comes in if you think about this, if the Fed is a private organization, I try to put myself in the shoes of the Fed. If I was the Fed and I'm looking at, okay, we've got government-backed security where we can take the tax money, we can take money from Uncle Sam, we can bail out these companies, give them billions of dollars, and we can take the other billions of dollars that we have, pump it into the market. We can go buy a whole bunch of equities in a whole bunch of companies. Market's crashed. It's at a low. You look at 07, 08. It's way down, way down, way down. The Fed comes in and starts buying up all these companies, all these shares, dumping money into the market. What does that create? Demand. And then what happens? People go, oh, hey, look at the market's going back up. Let's get in. So if the Fed piles a whole bunch of money into the market when it drops off, it artificially creates this demand, even though it's kind of artificial, but it's not. It's there, but it's not, because what happens when the Fed gets out? Exactly. And what happens when the Fed can't hold on any longer, or can they hold forever? It appears that the Fed has been acting as traders, as we would. And that's why I say, when you put yourself in their shoes, when you step back and go, okay, if this was me and I had all that money, I had to put it somewhere, I had to do something with it. And you know that you have the leverage and the ability to push something. I mean, imagine if you had, $50 million in an account, and you could, take one specific stock that isn't very big, and you could go dump $20 million into that stock and create, that $5 stock. It's going to create so much demand, it's going to run it up to $7. Well, if you buy $20 million at $5 and it goes up $2, that's a 40% run, right? And you cash out at 7, you just made 40% because you had enough power to push it up to make it profitable. I don't know. Maybe I'm conspiracy theory in it, but if you had that kind of power and you knew you weren't going to get audited and you could artificially inflate something, then why wouldn't you? Especially if it means you can make more money. Yeah, exactly, Robert. Because do you know why? They're not, because they're bureaucrats. I mean, you know this, I'm sure already. They're not, they don't think far enough ahead. They're not business people. They don't plan out things in advance. They don't do forecast. Well, they might, but usually they hire consultants and stuff to do that for them because they don't really know anything. Some of them might. I'm sure that some do, but for the most part, they're anyway. We don't need to go down that road. I'm just looking back at questions, making sure I didn't miss anything. Exactly, Brenda. Love it. Um, yeah, I know Dale does some of that, so I haven't seen Dale for a long time actually. So I know he was at home for a while, but yeah, trade what you see exactly. Okay, now we're gonna get back to. I think. Did I beat that question enough? Large question. So yeah, it's getting to the big picture. It's will we have a market crash? Possibly. The best thing I can say is be prepared for it. Just get ready for a market crash, because it's very possible when you look at the bigger picture and the possibility, the situation with the Fed, you got baby boomers, and you take these different things into account, and it very well could happen. And it goes back to the question that I posed before: is are there enough people to step up? You got the baby boom generation who's going to start to trickle. They'll start to pull their money off the market little by little, and then if things start to crash, then they will panic and unload everything and go straight to cash. It's what I would expect to have happen. But that begs the question is, are there enough people in the world? Is there enough money from other countries? Are there enough people that will bring money into the U.S. markets to keep it afloat, to keep it up? Or if it crashes and the baby boomers, they stay away. And there you get into the human psychology of what will people do? How will people react to a situation of the market selling off quickly? So, um, very difficult to say. But let's go through do some technical analysis on some of these real quick. That some of the companies that people threw out. CMI. Anybody see that pattern there that's developing right now? Let me take that line off. Actually, if you don't see it, then you should get patterns in a flash. Those of you that have had patterns in a flash should see it. Patterns in flash is it's basically a training tool I created to recognize patterns like that on the right side of the screen. Because right now you've got a broadening pattern. Some people call it a megaphone. It is typically an indication of a topping pattern. It's usually an indication that the trend that's been in place previously is coming to an end. And the reason is, and I explain all this inside the videos of patterns in a flash, because if you're not familiar with that tool, you don't see the chart? Let me see, okay. Yeah, you should be able to. I've got the audience view here, and it's showing for others, so other people are saying they see it, so maybe there's a delay. Let me make it, whoops. Let me zoom it in so it's a little easier to see if you can't see that. So, but basically what this pattern is, and I was getting to describing inside patterns in Flash, there's not only flashcards to train your eyes to recognize the patterns, so you can see it like that. It just pops off the screen at you. But also there's videos explaining the pattern and describing it. Now this particular pattern, basically the stock is getting more and more volatile. The swings from high to low are getting bigger, and it looks like they're about the same speed-wise, but except for that drop there a month or two ago. So in other words, the swings are getting bigger and wider, so it is getting more and more volatile. And usually when volatility increases, generally speaking, that means there's going to be a change of direction. Will that happen with CMG? Or CMI? This is CMI. This is Cummins. Hard to say. Don't know. Let's see if there's any indicators that give us a clue. And there is. If you look at the bottom, notice the, in fact, I'll make this red so it's a little easier to see. Come on. There we go. And we'll make it thick. Notice the tops there. Notice the highs are getting higher. And what do we see here on MACD? We see the highs getting lower, do we not? And generally speaking, what will eventually happen is eventually the price chart will catch up with the indicator. Generally speaking. That doesn't mean all the time it does. But I've seen this many times where you get divergence, where an indicator is going one way and the price chart is going the other, which the price chart is an indicator, so let's make sure that's clear. Thank you for letting me know. I will make it bigger, so I don't want to lose the entire MACD thing. Let's get rid of Stokes, that'll help. And let's get rid of a couple of other things too. Bollinger Bands. We'll get rid of the moving averages. There we go. 200. So basically, this is almost, and I use this analogy, even though it's maybe not the best analogy in the world, but I think it's effective. If somebody's laying in the hospital bed and they've got all these monitors hooked up, right, and the monitors are measuring internal things going on, and you might be sitting there having a conversation with this person, and then one of the monitors starts to show that something internally is not quite right. That's basically what MACD is showing us here. The price chart is giving us higher highs and saying, hey, everything's fine, we're healthy. But then that monitor over there is squawking and saying, you know, something inside's not quite right. You can't see it on the outside, but something's not quite right. And this is actually a pretty significant divergence, because the highs are not, well, they're not huge, but I mean, they're a buck or two higher than the previous one, but MACD is descending fairly rapidly. Love it, Robert. He says, I see it, I see it. Said the blind man to his deaf wife. I logged out and back in. Now I see it. That's awesome. I haven't heard that one. So that is definitely something to be cautious with CMI. This particular pattern is it's probably the only one realistically that is very difficult, almost impossible to really trade on a short-term basis. Just because, I mean, take a look now and you say, okay, if we stay in this pattern and it continues, if it's going to drop from here, it's going to drop all the way down to about 104. And even if it takes, say, a month to get down there, by the time it drops down there, it's dropped so far that the odds are higher that it's going to bounce and move higher. So you can't really trade a break of the lower end of the pattern. The only thing that would make sense would be to trade a break of the upper end of the pattern, which even then it's at an ascending slope. And as you can see, that's happened over the last 2 or 3 weeks. It's already ran from 104 to 120. And while stocks do rally and rally and rally and rally, and they usually pull back or slow down for a while before they continue to rally, especially a steep rally like that. So, so let's see. Currently see a triple top. Kind of. Usually triple tops, the tops are about the same or close to it. They're a little higher here, so. But I'm not going to get OCD or anything. Tesla. Interesting. Yeah, and I see pretty much nothing here. I don't see any patterns that would be tradable. I don't, at least not for me. We could throw, some support resistance lines on there. That's a pretty solid line there, right about 240. And then, we've got some, I don't understand that. There we go. So really, there's nothing here. You've got a rising through methods here a few days ago, but not a whole lot of volume to it. It's a continuation pattern. If you can all see it, again, if you can't see it, then there's the last day of the pattern. First day of the pattern. I don't know where the rectangle went, but so the rising three is a continuation. It's a candlestick continuation pattern. And you've got one big up day, and then the perfect textbook pattern would be 3 small days inside the body of the first day. Here we've got 4, which is fine. It's not a big deal. And then the last day of the pattern is basically, this is about as textbook as it gets, other than the fact that there's 4 days instead of 3. And you'd want to see big volume in the last day of the pattern, which was 3 days ago, or 4 days ago. I guess that was the 18th. So was that Monday? In fact, let's see. I haven't done an update yet today. Let's do that real quick before we finish off. So you've got a continuation pattern, but the question, let's say you were going to trade it from here, your resistance is up at 240, which is only, 12 points, not even 12 points. 12 points on a $220 stock is not much. So there's not a whole lot of upside. There's today's candle, so it kind of dropped off a little bit today. There's not a whole lot of upside. And there we go. The downside really is, you can't really let it go all the way to 208 because that's way too far. That's insane. But you could put a stop here. I don't see any trade with this. It's in the middle of a range. There's nothing really to be had here that I can see. Nothing that I could use to justify the risk. So what do you think of the chart of XLF? Well, let's see. There's a long-term picture. This is a Spiders financial sector ETF. A lot of this, I don't know what size this ETF is or how big it is, but a lot of the ETFs are very popular. So most of these big funds, the big companies have put them out, but not many of them are actually very liquid. They don't trade enough to really do anything. I'm not sure about the financial sector. There are a handful of them. Besides, you've got the Spiders and the Qs and the Diamonds. Those are the 3 main ones. There's a few others that are pretty big. There's the Russell, was it IWM? IWF. Drawing a blank on which one it is, but there's a Russell one that is fairly good. But a lot of these smaller ones are not very liquid and they don't trade a lot, so the options activity is not very high. I'm going to guess this is one of those, And the gappiness of this thing, I can't stand the gappiness. I can't. Any chart that looks like this that's super gappy, I usually just stay away from. Because I don't know about you guys, but I don't like waking up in the morning and seeing a giant gap. I mean, it happens. You're going to have to deal with it. But on a stock that gaps every day, yeah, I usually steer clear of them. So, but there's a downtrend, pretty clear, pretty obvious. Um, there's, I don't know if I call that. I was gonna say there is an inverted head and shoulders, a giant one, but it's also not at the end of a downward move, so I wouldn't give it a whole lot of validity. I wouldn't give it any validity actually. Um, with respect to whether there's something now that's tradable, we're at a resistance level. We're at not only that upper, the downtrend line, but we've also got a horizontal resistance there, 2370. So, but honestly, not terribly excited about that one. What else do we have? It was CMG. That's why I was thinking CMI. Chipotle has not recovered from its scare. I've still been there several times because the food's delicious. It's quick and easy and reasonably priced. So, question becomes, what will Chipotle do from here? Obviously, it's always the question, right? So just some simple basic analysis. Obviously, we've been in a downtrend, so don't expect it to, it may or may not turn around. We've got a nice little, there's a triple bottom basically, triple, quadruple bottom. It's built a nice little base there at 390. Bounce back up. I mean, it's sitting, there's also a little bit of resistance there at 417, 418, which is where it's sitting right now. If it rallies from there, the next target is 440. So you're talking basically 20 points, 22 points, which is a 4 or 5% rally, which isn't bad. In a $400 stock, options, I haven't looked at options in this in a while, but I don't think they're very cheap, which is fine. It's just some people don't want to pay 20 bucks for an option. And I happen to be one of those, even though if I wanted to, fine, but I don't want to. I'd rather go trade Alcoa. But this may, depending on what, we haven't really formed a spectacular bottom, even though we've got a small triple bottom. But I mean, long term, if you were looking at long term on this, I wouldn't expect this to be a bottom and expect it to rally back up to 600 or 700 in the next 1 to 2 years. I think it's going to take more of a substantial bottom for this to really take off to the upside and go back to that $700 level. I don't think it will make it. That's just my opinion. Short term though, I mean, you got 20, 25 points, you could rally from here. If it broke out at 440, we might run to, we got about 475, 480, and then 500, and then about 540. So interesting, they all come in like 40-point increments. Oops. I'm trying to rally, get through a whole bunch of these that, okay, that's not right. NFLT, NFLX. Netflix. Another one that, not terribly excited about it. Don't see anything, nothing really pattern-wise that jumps out at me. These are those ones that I've just decided, what, when it's like that and it's just gapped or something like that, I just stay away from it. Some people like to, I want to trade this particular stock. Well, if you get stuck on one particular stock, then there's going to be problems. Then you force trades and you do things, get into trades that you shouldn't be in, and just because you want to be in the game. So we've got to guard against that. Exxon, we've got the all-time highs up there about 98, rallying. Obviously, the oil market has seemed to have stabilized a little bit. Where it goes from here. Oh, look at that. Now notice this is not nearly as dramatic if you don't see it. If you look at MACD, it is basically flat. It's a tiny slope to the downside. Even though this thing's been rallying for, 6 or 7 months now, MACD has not really rallied with it. Not nearly as dramatic as Cummins was, but definitely the MACD is not going with the price chart. And generally speaking, it should tag right along with it. So that's just a sign of caution, the way I see it. So the MACD divergence is one of those things that just says, okay, watch out, be prepared. Baidu, another one, big giant symmetrical triangle, but doesn't necessarily, unless you're looking at a 1 to 2 or 5 year picture, it doesn't mean a whole lot, in my opinion. Looking at some horizontal support resistance. Gosh, the next major point's right there. Because it almost Baidu looks like from a long-term picture that it wants to break down. It's stabilizing, it's holding right there about 160. But actually, this is the only one so far that looks pretty good for a trading candidate. In fact, you see Stokes and MACD are both turning south. So if it breaks 160, I would think it would drop to about 150. So there's about a 10-point potential move there, 6-7%. You could actually call this a descending triangle. It's not, yeah. Yeah, if that breaks 160, I like this. Looks of this for a bearish candidate to about 150, possibly even down to about 140. Which, watch, this will be interesting. I bet that's about what it is. Oh, maybe a little more even. Because the way we measure a triangle is the distance, what's called the base, right? And whatever that distance is, oh, there you go. Interestingly enough, whatever that distance is about what we expect it to move if it breaks out. Now, you notice this, I drew this, and this is the mind-boggling thing about patterns. If you're not familiar with patterns, then I would suggest learning them, because you get a measured move like this. It says it should drop about 25 points, which is the longer-term picture. 150 is a possible stopping point, but if it breaks through 150 as well, it's probably going to about 135. And on the short-term picture, we see this little bit of support there about 140, which would be about a 10-point move, which makes sense. But then you go back to the long-term picture. I drew that horizontal line there at 135, which is based on the 25 points of the pattern itself. And lo and behold, what do you see right there at that 135 level? Very solid, very good long-term historical support. So Baidu is the first out of the several that we've looked at, 6 or 7, that looks like it could present a trade soon. Excuse me. But it's got to break that 160 for me to be interested in it. So that's just me. And again, we're talking practice trade, paper trading, right? It's not, I'm not suggesting or telling you should trade this. It looks like a good candidate at this point. But that, the market could bounce, and this thing could bounce at 160 and take off to the upside. So we never know. Okay, one more. Spiders, which is a good one to finish on because it's basically the overall market, right? Which has broken out to the highs and continuing to rally, which is kind of mind-boggling in my opinion, but then again, who knows? And these types of rallies, and this is another reason, when you put all the stuff with the overall market together and you start to question these rallies, because this thing, we're talking, we bounced at 200 after a huge drop for a couple of days. We bounced at 200 and rallied so steep and so fast. The odds of this staying up at this level are slim. When you look at the last rally back here in February, we dropped off fairly quickly, double bottom, bounced, and took off and rallied. It wasn't as steep as we have now. Actually, I guess it was kind of close. But it rallied really quick and then slowed down a little bit and then continued to kind of truck along for about a month and a half. So we may get that type of move here. But I think we've moved so far so fast that the odds are that it's going to go sideways or pull back from here. So not likely. This rally is not likely to continue. And I'm just speaking purely from an odds perspective. So and that is the spiders. So it's a good one to finish on because that is essentially a representation of the overall market. So just look at the overall, just an overall picture of the market is, we're going to go sideways or drop from here most likely. So I would expect to pull back to about 210, 208 over the next couple weeks or month before it either takes off or drops back into that channel that it's been in. So all right, Judy, just for you. Alcoa. Yeah, it busted up. It, just looking at the numbers that are there, the support and resistance is there. I'm going to move this out of the way so we can see it because we don't need them right now anyway. Um, I don't see any trade to be had yet. I mean, if it gets up to 1120, then see what the action looks like there, and then either if it looks bearish, then a downside trade. If it pulls back to 10, then there'd be something there depending on what it does. So in other words, I don't look. I look to see what I want major support and resistance levels, and I want to see what the action looks like, what the candlestick pattern looks like. So if it pulls back to one of those places, either up or down, that's when I would look at it for a trade. I don't trade things when they're in the middle like this. It's too risky. There's too much risk there. The risk reward's just not there. So I believe that not having you guys being able to communicate through this text chat is a good thing, right? Robert says, sounds like Judy's a teacher's pet. I think that's the first question from Judy, or the first thing I looked at for Judy today. Anyway, with that, I hate to cut it off early, but I've gone longer than I should have or needed to. So, yeah, he is jealous, I know. This is one reason I love doing this, because you guys keep it fun and it's a blast. So we'll be back next week, and like I should be able to go to full time next week. Don't have any issues, at least at this point. So yeah, he wants to be the teacher's pet, I know. Awesome. Well, appreciate you guys coming and hanging out. Let me just real quick, if you're not familiar with the tools that I've got, I almost forgot to mention this even, just because I rambled on longer than I was supposed to. So I was supposed to quit 8 minutes ago, like usual, right? I have too much fun doing this. That's why. Patterns in a Flash, I refer to a little bit. It's a tool all designed to help you learn to recognize the patterns, not only with the flashcards that train your eyes to see the patterns, like that broadening pattern we saw, but also there's videos in there explaining exactly what each pattern is, what to look for, what makes it strong, what makes it weak, and also some potential entry points based on your risk tolerance. 6.5 hours of video. The flashcards, those quizzes. So you see the price there of $229. It's actually way too low. And that's my opinion, but then again, I've had lots of students say it was the best deal I've ever gotten, just because of the volume of material that's in there and the benefit to get out of it. So, and we've talked for years about raising the price, but at the same time, I don't want to, because I want more people to get it. The more people that can get it, that can access it, the better. And these are all digital, just so it's clear. It's available 24/7. They are on demand. So it's not a live class. It's not something you have to schedule for. You can literally access it on all your mobile devices. So if you get stuck in jury duty, you can sit and pass the time in jury duty with Patterns of Flash, or Advanced Trading Mindset, which is 6.5 hours of video. Again, same amount of time. It just was coincidence. But it's purely all about mindset. There's no technical analysis, no charting. It's all about the challenges that we bring to the market and how we can correct them, how we can fix them mentally. So, which is the biggest challenge for trading anyway. So, and then you'll notice at the bottom, these are two separate independent tools. You can get one, you can get both. You can renew them. The nice part is that you can renew them at the end of the quarter for just 99 bucks. So you can keep it active and keep reviewing it as much as you want for just $99 a quarter. So, all right, with that, appreciate you all hanging out again, and we will see you all next week. You'll have a great rest of the week, great weekend. Take care. Bye-bye.